Staying in North America now, but turning our attention to another resource, uranium, if anyone in the Australian government is listening. Peter Morehouse, MD of Basin Energy.
Yeah, thank you very much. Thanks for the intro. The opportunity here today to fly the uranium flag. It's a little bit different, being the only uranium company here between the hydrocarbon guys and the hydrogen guys, but we'll do our best to tell you our story. The talk today is not about the uranium sector or why we're in it or why we believe it. It is about Basin Energy and why our value proposition of being an exploration company with pure play exploration assets in the Athabasca Basin, one of the world's leading jurisdictions for uranium, is a pretty good place to be. So I will, there we go. Our disclosure, feel free to pop around the booth. There's a copy there if you'd like to come and have a look at it at your own time. A little bit of background on Basin Energy. So Basin is only 12 months old. We formed in the start of last year with the idea of bringing ASX exposure to high grade and specific credible exploration plays for the uranium sector. Fundamentally because we believe that this is a pretty exciting business to be in and space to be in. You hear the energy stories today, and we believe that nuclear is a solid component of that over the coming midterm. We listed 6 months ago. We currently are fully funded, so we've got, at the end of last quarter, 7.6 million in the bank account. We've got a series of exploration targets, which we will be hitting this year. But the company was formed off the back of 3 assets which we acquired interest through a partnership with a group called Canalaska. So Canalaska are a Canadian-based exploration group who've been operating the Athabasca Basin for a significant period of time. Now, fundamentally, those assets all have the right criteria for a significant discovery. They have the right rock types, they have the right structure, and critically, when you're looking for uranium, they have explorability. So they have a pathway to move these projects forwards. The assets were selected because we were looking for these credible exploration plays, and the jurisdiction speaks for itself. The Athabasca Basin has been in production for over 65 years, has been a top producer of uranium, top 3 producer of uranium for over 45 years, and consistently ranks in the top 2 or 3 of the Fraser Institute for Mining Perception. So these are the jurisdictions we're operating in, and I think those credentials speak for themselves. Briefly, the team and who's involved. Our executive or non-executive chairman is Blake Steele. So Blake was the gentleman who formed a company called built a company called Azaga. They were a multi-asset uranium group in North America. Were acquired by Encore Energy at the beginning of last year for some $200 million. My background, I'm an exploration geologist by trade, specifically in uranium, and I've worked extensively on a variety of uranium opportunities in Australia and Southern Africa. And post-IPO, we had the addition of Odile Mofrace. Odile is an ex-Orano project lead based out of Saskatoon. So she brings a fantastic knowledge base of the basin and exploration specific in this environment. She is at the booth, and I do encourage you to go and have a chat and give her your hardest possible uranium questions, and she'll do her best to answer those. A little bit about our projects specifically. So we have 3 assets. We have the Gaiku project, which is located on the eastern side of the Athabasca Basin. So this is a map view showing you the key deposits in the region. We also have our North Millennium and Marshall projects located just within the basin itself. Now, for those of you who aren't familiar with uranium or the basin itself, these grades and sizes of deposit are phenomenal. And this is the part of the world for these high-grade, large tonnage deposits, and this is why we explore in these regions. The likes of McArthur River, some 675 million pounds, sitting at almost 17% uranium. When we talk about Australian assets, Jabiluka would be one of the bigger high-grade ones, and that sits about 0.5%. So it's a different value proposition, and when you get it right, it's a phenomenal place to be exploring. Now, you may have seen this diagram before, a company called Alligator Energy, who I can see looking at me from the back. We pulled this together back in 2012 with Rob Sowerby. But this is just to demonstrate, for me, if you're an explorer, why are you in the basin? And the reason is because even when we've been exploring in the last 10 years with uranium sitting at $30 per pound, the world has been struggling for exploration and for budgets. This basin has continued to deliver success and has continued to deliver significant shareholder returns. The example I'm going to use here, or the prime one, is NextGen's Arrow discovery. So Arrow was discovered back in 2014. Upon discovery, pre-discovery, they were sitting at about a $30 million market cap. Overnight, they drilled a hole, they went to about $60 million market cap. First resource was put out, took them to about $500 million, and they're currently over $2.5 billion market cap. Get it right, this is the potential reward. Now, fundamentally, this is why we look here. We look for the same rock types, we look for the same structures. You have a company with an EV of just $2 to $3 million, and you're fully funded. It gives you a pretty exciting value proposition from an investment perspective. Further exploration success, our fellow ASX listed company, 92 Energy, fantastic results close to our Geikie project. They've been drilling some phenomenal hits, 6 metres at 2.2% in a broader hit at still some pretty good grades. Baseload, again, next door to Geikie. And our joint venture partner, Canalaska, so they have a joint venture with Cameco as well. We all know Cameco, if you have any knowledge of uranium. They discovered last year 9 metres at 2.6, adjacent to one of our projects. So again, it comes back to exploring in places which continue to deliver and continue to have that reward for shareholders. I'm going to go back to a little bit about Arrow. So, and I'll tell you why in a moment, but I was having a Zoom call yesterday with a geologist out of the Athabasca. And he was saying, oh, you know, it was winter 2014, we were on a drill rig and it was freezing, and we heard this rumour that these crazy, to put his words, crazy bastards were drilling 400 metres past what we call the unconformities. So that's the contact between the sandstone and the basement, traditionally where these uranium deposits have been found. And these crazy bastards are drilling 400 metres past it. Must be Australian. Okay? 2 to 3 weeks later, PDAC comes, which is the big conference in Toronto, and Arrow was announced. So that crazy bastard was Andy Brown, who's the geologist over in Toronto. Some of you will know him. Now, why is that important to us? Suddenly, the exploration focus which the basin has had for some 40-odd years of targeting that unconformity shifts. That deposit isn't at that contact. There is opportunities beneath that. Subsequent to that, people have been drilling underneath some of these main deposits and having success in what we're calling basement-hosted mineralisation. From a junior's perspective, this means suddenly there's an area of ground which isn't looking at 1,000 metres deep, and it's shallow. So, which feeds into our Geikie project. We have the right rock types, the right structures, we have enough cover to mask a deposit, which has been unexplored for uranium. So, for Geikie, that's what we're aiming for. We also have our North Millennium and Marshall projects, which are a traditional conformity target, also excited about, but for the next 6 months, our focus will be on those shallow Geikie opportunities. Okay, quick overview map, again, similar to one you've already seen, but just to give you the credentials of the broader projects. I'm going to go into a bit more detail about Geikie, but our North Millennium and Marshall, we're exploring for a continuation of Cameco's Millennium deposit here. So Millennium's about 100 million pounds at 3.7% uranium. Geophysically, it's mapped by a nice big northeast conductor in the basement. Now, this is associated with some graphite units. There is a Cameco mother fault, that's what they call it, not me, which the north-south fault goes to the middle of this. It's mapped lovely in geophysics. Follow that north-south fault further north, about 7 k's, you hit our property, and you've got a repeat of that geophysical signature. You've got an EM conductor, same orientation with the same breakup. Now, this is a little bit deeper. This is a 700-metre target, but it's one that quite clearly needs drilling. There's no drill holes in it. So from a geophysical target and a repetition from 100 million pounds of uranium, we will be pursuing that and moving that forward over the next 12 months. Marshall is adjacent to that and is a similar story, but we won't go into that one today. So why? Why did they get into Geikie originally? So as I said, we've already talked about the reasoning, the foundations for that being the same geological fundamentals as basement-hosted mineralisation success in the region. The guys here identified a package of land through Canalaska. It's a reasonably big area, and broadly speaking, the interpretations had the right rock types and the right structures. You've got a bit of cover over the top, enough to mask a big radiometric response. You go digging into that historic data, and you see, okay, nobody's really done the uranium work, but they have done some base metals work, and there's some base metal anomalies located on the tenement. Now, some of the base metal rock chips are really indicative of alteration patterns and halos for these uranium deposits in the district. Okay, great. So you've got some pathfinders, probably the right rock types, probably the right structures. Dig a little bit deeper. there's some rock chips sitting there at about 0.25% uranium. So now you've got an indication that uranium's in the system as well. So you're starting to build a bit of a story. Considering the potential reward of this area, you don't turn your back on opportunities like this. So the guys entered into an agreement. Basin IPO'd, we IPO'd in October, and we went out, we did some just basic radiometric and magnetics. You can't spice it up, but high resolution, really good data. Now, the first key thing that's picked out is 4 very big, what we call Taberner Age north-south faults. So these are faults which have the capability of penetrating nice and deep into the basin, the plumbing network from one of these deposits, okay? They allow you to move fluid around. They seem to be occurring where you're seeing these geochemical anomalies as well. So you've got a bit of faith that they're also carrying the right fluid. We then commissioned an AEM survey, which has been somewhat frustrating, but is now completed. But in the meantime, while this was being flown, Adil was busy digging through those historic reports in the department for information whatever we could glean from the area, trying to build a bigger picture to de-risk this as far as possible. Now, what she identified was 3 drill holes in the tenement project area. Now, we knew there had been some drilling, but we had very limited data on this. What we found was that these guys were drilling in 1970, 1971, okay? They drilled 3 holes. They found a lithological setting, which we believe is spot on for uranium mineralization. Critically, they identified some chlorite, sericite, hematite alteration, and they identified some relatively good base metal mineralization. They did not assay for uranium. So you know you've got a fluid circulating here which is carrying metals. You don't know if it's got uranium in it, but you know you've got uranium at surface. Okay, if we compare that lithological package, which is a nice big hard uranium-rich granite adjacent to a nice sandstone or silicified sandstone unit, and then a big graphitic fault, which is one of these key pathfinders for exploring. It's graphite in a fault, not graphite structural graphite. And then and you look at what the Great Work 92's done next door. That's the right setting. So, why am I so excited about that? Because that appears next to some of our main conductors, which have now popped out of this EM survey. So we've got a way of saying where this package is sitting in our project area. Now, where that's sitting, and it's being intersected by some of these big regional fertile faults, you're seeing offsets in these conductors, and to me, you can't get a better exploration target than to go drilling. So that's what the focus for the next few months is going to be. We'll be drill testing these. We're fully funded to go ahead with that. We've also outlined a few other more subtle conductors on these north-south faults. We're going to build those up. We're not quite confident enough to go drill test them yet. We do believe they warrant further work, but we'll be doing some further geophysics on those. So come summer, which is only 6-8 weeks away in the Athabasca, the intent is to roll out this program and get going. Okay, I'll just flick through. Now, very briefly, we talked about North Millennium. So North Millennium, as I said, continuation from the Millennium deposit. We've got a north-south fault with the interrupted conductor. That will be another focus, another string to our bow as we move these projects forward over the coming months. Now, in summary, fully funded, $7.6 million of cash. We've got an EV of just 3 million or so. We've got a market cap of about 10. Now, that's a nice position to be in when you think about the quality and the quality of targets and portfolio of projects we've got to be chipping away at. Yeah, pretty exciting. The deal structure of where we're at, we've got 3 project areas. We are earning into all 3 of those. So one of them, we've earned into 2 of those. One of them we own 100%. So our Marshall project, we got at IPO. Our North Millennium and Gaiku projects are independently earnings, just based on expenditure of the ground. So at IPO, we issued stock to major shareholder to the joint venture partner, and we agreed to commit $2.5 million of funding, takes us through to 60%. Another 2.5 takes us through to 80. Quite clearly, you can see if you have success, earning in straight pathway to that 80% is not an issue at all. So a credible way to having a solid foothold in the basin and a great start for a junior exploration company in uranium in the Athabasca. So that's me. Thanks, guys.